we've had some partners that have said, hey, you're talking with me and you're telling me all this really great stuff. Why not get it out in a communication? A lot of really great things will be happening, but maybe we wouldn't communicate that on a monthly or a quarterly basis to existing investors.
Can you tell us about a time where maybe an LP experience didn't go so great?
So
Investors and operators, welcome back to the Invest Clearly podcast. I'm your host and CEO of Invest Clearly, Pat Zingarella. In today's episode, we sit down with Angela Durham of Haven Marinas, a sponsor focused on acquiring and operating marina assets across the Sun Belt. Angela shares how her team approaches investor communication in a niche asset class, navigating questions around land leases, water rights, and deferred maintenance. We talk about fund structure, cap rate adjustments, and how LP feedback shaped their reporting and post-acquisition strategy. Let's get into it. The views expressed in this podcast are those of the individual guests and do not reflect the opinions or recommendations of Invest Clearly. This podcast is for informational purposes only and should not be considered investment advice. The appearance of a sponsor or investor on this show does not constitute an endorsement or a warning. Invest Clearly is an objective and neutral platform. Always do your own due diligence before making any investment decisions. Great. Angela, thank you so much for joining me. I got to build a relationship before Best Ever Conference. You guys got involved in Invest Clearly, so why don't you take maybe like 30 seconds, tell us about Haven Marinas, what you guys are doing, and then we can hop right into it.
Sure. Thanks, Pat.
Yeah.
So at Haven Marinas, we are acquiring and consolidating marina properties, mostly in the Sun Belt region where people can come out and enjoy the water 6 or 7 months out of the year. And these are properties that have about 6 or more revenue streams. So it's not just a place to park a boat, even though we love the long-term rent revenue that comes from that, but really a place where people can enjoy the water and spend money on other ancillary revenue streams. We're acquiring these from mom and pop operators and adding value very quickly by raising rents, improving their overall operational efficiencies, and then adding additional wet slips to grow the revenue.
Yeah, that's awesome. I have a very unique position in this industry where I get to see different asset classes emerging, unique, and I've actually brought up marinas on a couple podcast episodes just as one of those examples because we're seeing a lot of demand for these niche things. So, and the theme of Invest Clearly is all around investor trust. I imagine, and correct me if I'm wrong, that marinas are not what we would call a mainstream asset class yet. So I imagine you're pulling a lot of investors from the multifamilies, the retail, the industrial into marinas. So what is the trust-based conversations like with new LPs that are maybe trying to get educated and then you guys are also trying to sell? Like, what is that balance like with these investors?
Sure. Thanks, Pat.
Yeah.
So at Haven Marinas, we are acquiring and consolidating marina properties, mostly in the Sun Belt region where people can come out and enjoy the water 6 or 7 months out of the year. And these are properties that have about 6 or more revenue streams. So it's not just a place to park a boat, even though we love the long-term rent revenue that comes from that, but really a place where people can enjoy the water and spend money on other ancillary revenue streams. We're acquiring these from mom and pop operators and adding value very quickly by raising rents, improving their overall operational efficiencies, and then adding additional wet slips to grow the revenue. Yeah, so 100% of our investors to date definitely have multifamily and some of the others that you mentioned in their portfolio. So they're very familiar with commercial real estate, rent, value add, and really, we're just focusing a lot on timing and helping them understand the progression path that commercial real estate has gone through, very similar to multifamily 20 plus years ago when that really started becoming big. Self-storage had gone through a consolidation after that, mobile home parks, senior housing, even funeral homes. And so when we talk about timing, a lack of consolidation in this industry, and really showing how people can come to the water, pay their rents, which they'll pay year round, but then also additional ancillary revenue streams that really can add to the bottom line that they can participate in. I think another thing that is really interesting is that it's more of a lifestyle investment. So, of course, a lot of our investors not only invest in real estate already, but they're also boaters and they've been to a marina. They may understand how difficult it is to get a wet slip right now. So those investors really understand the value of these types of properties and just how much money their friends and their family and themselves are spending at these properties, and they want to take part in it. So yeah, we'll educate on the similarities and then also really the timing. A lot of that has to do with entry and exit cap rates that are available right now. A lot of these mom and pop operators haven't raised rents for 5, 6+ years. So the ability to raise rents on day one really outweighs and exceed that of other asset classes right now. And so that gives us an opportunity to show them value pretty quickly and illustrate that to them.
Sure, super interesting. Yeah, I live in like a marina district. Like I'm on the shoreline, and so the I see that lifestyle. I've spoken to a few of them, and it is really interesting. So when you think about the difference in the core real estate and the marina, is there any, w- is there like an underwriting risk that people may not think about when coming into this for the first time? Say they're exploring investing in a deal or an asset with New Haven Marinas and they're doing their due diligence. Is there something you advise? Hey, this is much different than your core real estate operations. This is what you should look out for, and this is what you should be, I guess, underwriting from a risk analysis standpoint.
Yeah, I would say weather plays a part in that.
Interesting.
Weather we can't control. With us, we focus mostly on properties that do not experience hurricanes. So insurance is definitely a big thing when it comes to marinas. And I would also say that it's not like a typical property. A lot of the properties in the country, about 70%, are under a land lease and the other 30% are fee simple, where marina owners actually own the land. Now, with water rights, there's always regulatory bodies that govern the water rights
Hmm.
everywhere. No marina owner actually owns the water itself. And so that introduces some additional layers of complexity, things that we need to take a look at. We'll look back 10 plus years on not only financials, but also any sort of environmental history and all of that. So we can really evaluate that. Now, in addition to that, deferred maintenance with a marina. Of course, you've got your typical things, any of the structures like restaurants and retail ship stores, any repairs that need to be made there. Obviously, parking lots, improvements that we can make, like dog parks or playgrounds for kids. But in addition to that, under the water and in the dock systems, a lot of these will need to be fully encapsulated so that the foam is not actually going out into the water systems. And so that's something that we look at a lot to understand in the next 2 to 3 years, would we need to encapsulate these dock systems where the boats are parked, or is that already completed and then factored in those costs if needed?
It's so interesting. And so when LPs are underwriting these, are you guiding them through these unique things to look out for, or is this, I guess, learned due diligence? Like, what is that like when someone's coming to you for the first time?
Yeah, we definitely share those details per property. Most of the marinas that we've acquired to date are already 95 to 100% fully encapsulated. They may be a B or a B plus type property if you're comparing it to other asset
Yeah.
classes. Whenever we do this, we're looking at the insurance premiums and history, 5-year loss runs before we acquire them in our due diligence periods. And then we will plug that into our current master group policies that allow us to, this year, for an example, save 12% in annual insurance premiums. And so we can really factor all of that in. And then we would provide an underwriting model to investors on a per property basis. Our current offering is a fund structure where we should have 2 or 3 marinas. And so each of those would look slightly different. They'll all have the same type of acquisition criteria, but we'll let investors know how many wet slips they have, and obviously how many we can add, how many we plan to add in the first year, how much it should cost to do that, and factor in each of the individual cost projections for each marina.
Interesting. Very cool. And we talked a little earlier about, I guess, the balance of education and marketing, but I talked to somebody recently who he does retail, but for cannabis tenants. So there was a lot of education on the unique value prop there. When you're talking to new investors, do you find it being a multi-call process where it's not just a, hey, here's the deal, underwrite wire in 30 days, or does it find out, or is it longer sales cycle? And I guess, how do you guys manage that?
Yeah. And so if we look at our offering last year, about a third of the capital that we raised was from people that had found us online. and inquired. Maybe they were a boat owner or they understood the supply and demand issues right now or saw one of our ads talking about above average IRR metrics that we have. And I would say on average, it was about a 2-month timeline from the time
Okay.
that they found us and had on average, I'd say about 3 phone calls. A lot of times people want to understand, is this recession proof or recession resistant? And we'll talk a lot about that. They may not understand the types of properties that we're acquiring, which include very popular lakes that millions of people visit every year, and or properties that a lot of the marina or the boat and RV owners are digging in with both heels. So they may have a houseboat that they live at year round and they're renting a slip from us. They may have an RV campsite that they've built extravagant decks around and they're not going anywhere. That's
Yeah.
actually their way of life. That's their lifestyle. And so the occupancy remains very high. Even when we have people moving out within a matter of hours, we typically have those slips and those RV sites replaced because of the waiting lists. And I think it really comes down to if they're building more boats and selling more boats every year, same thing with RVs, and there's only so many places to put them. There's only so much waterfront property and lakes.
Hmm.
Barrier to entry in this industry is really second to none. They're not really approving a lot more marinas to be built, and that means that we need to expand the ones that are already there. A lot of the mom and pop operators aren't excited about doing that, and so that's where we come in.
Super interesting. Very interesting. Okay. And you mentioned you guys are at north of 90% occupancy in some, and this is fund two, right? You guys are on fund two. Is that?
Oh, yep, our third offering,
Oh,
Fund
this is your
2.
third offering. Okay, very cool. Okay, so you talked a little bit about occupancy, the wait list. In terms of projected returns versus actual, how are the funds performing now for LPs?
Yeah, so we projected 8 to 10% cash flow in the first couple of years for properties prior to getting into the third year and then an exit. We're achieving that right now in our first offering. Our offering from last year, we had the first distribution go out right on time, which was for Q1 of this year. And then Q2, we expect that to be even higher because the second property we acquired in October of last year will be added to that. And then as far as a full cycle, we are actually exploring some offers that we've had in just under 3 years or less of owning these properties that meet or exceed our original pro forma objectives, which is 25 to 30% annual IRR.
There you go. Good, great stuff. This episode of the Invest Clearly podcast is brought to you by Scale IR. If you're raising capital, you know the hardest part isn't just generating leads, it's turning those leads into committed investors. That's where Scale IR comes in. Scale IR transforms your investor engagement process with their proven solutions that optimize lead qualification, accelerate investor conversations, and drive higher conversions. From seamless CRM integration and intelligent workflows to expert investor qualification specialists who handle your initial discovery calls, Scale IR gives your team freedom to focus on closing deals. If you're ready to scale your investor relations and capital raising effectiveness, visit scaleir.com to learn more and book your strategy call today. Scale IR. Engage smarter, convert faster. And so you mentioned earlier about a third of the capital you raised were new investors. Are 2/3 repeat? Are they continually reinvesting in new assets, new funds, things like that?
Yeah, repeat investor partnerships that we have, and then also referrals from our existing investor network.
All right, great stuff. Yeah, and I know you got involved with Invest Clearly right before BEC. You guys hit the ground running pretty hard. Why is that investor trust important to you, and what else are you guys doing to drive that?
Oh, yeah. Well, find investor reviews have definitely helped us a lot. People want to hear that from another source. And I think there's still a subset of investors that like to chat
Yeah.
with existing investors. But, a tool like that was really helpful to say, hey, if we can't get permission in a short period of time, and you might not want to spend 10, 20, 30 minutes on the phone or bother or take the time of a current investor, they can just quickly see what they had to say about us and understand that it was from a third party source. That definitely did the trick with a lot of people. I also think showing screenshots, secure screenshots that are kind of blacked out with any personal information, but just showing the actual distribution history and how we're able to report to investors, examples of that, that definitely increases trust. They want to know that there's a place that they can look at any given point to see how much are they accruing in their preferred return, what do the last quarter financials look like, and asset management reports. And so we'll give them a snapshot into that ahead of investing to build trust.
Right. Now, is that traditionally asked for, or are you guys doing that proactively as a, hey, this is what you can expect when working with us?
It's whenever people ask for that, and definitely people that haven't actually met us. We're based out of Dallas, Texas, and a lot of our investors are here, which, a really great place to be. But as we opened up more on social media and our website and having people come in, of course, that's all across the United States. So if they're not able to fly in and meet us and they're just wanting, to really be sure before over the phone that they put their trust in us and send the capital in, then we're willing to give them a sneak peek into what our investors have been experiencing.
Great, great. And okay, so we're leading with the distribution statements when people ask for more transparency. Can you tell us about a time where maybe an LP experience didn't go so great? Maybe it was a gap in understanding. Hey, I thought this is what actually happened, kind of how you guys handled that.
Yeah. So, being that we have a small team to run lean and we're just really be judicial with, or I should say, put investors first and keeping our costs low. We are growing our team and scaling, but nonetheless, it's still a smaller team. And so, what that means is each of us are wearing a lot of hats, obviously, managing existing marinas, looking for new ones, and going through a closing process and due diligence at any given point throughout that cycle. And so, a lot of times, a lot of really great things will be happening, but maybe we wouldn't communicate that on a monthly or a quarterly basis to existing investors. And so we've had some partners that have said, hey, you're talking with me and you're telling me all this really great stuff. Why not get it out in a communication? And so I think our intentions were really great, a lot of great things happening behind the scenes, but maybe not as consistent of proactive follow up across the investor network. And so, we've learned about that, and we now communicate with our investors through our investor portal a
Oh,
lot
great.
more frequently.
Awesome. Great. Yeah, you mentioned scaling. And I know you're in marketing. Are you also in IR okay, so you're wearing both hats there.
Yes.
What does scale look like for you guys from, I would say, acquisition standpoint, expansion, maybe location standpoint, and then as you guys do scale, how do you guys retain I would say, the trust-based process with the new investors going from a small team where everything's intimate, everyone knows, to larger process-oriented
Mhm.
company?
Sure. Well, in March of this year, we hired an internal accountant that we all had experience working with for years in this space in private equity. He's also our asset manager and he helps a lot with acquisitions. And so we've added, that person to our team. We do work with an external marketing agency, an advertising agency that when we look at the marinas, they will brand each of the websites as we onboard them. And so we have more of a templated look and feel, and then we'll get all of that launched within the first quarter, normally, of acquiring a property. Our team has a director of operations as well that is responsible for a lot of the technology and new processes that we implement at these normally archaically run mom and pop owned properties. So that would include reservation software, the ability to automate the billing process and book online, also software for the restaurant and ship stores for inventory. And on site, the director of operations will visit each marina to get that launched and get it implemented,
Right.
onboard the employees. We also have a regional operations manager that oversees up to 6 marinas. And we're about to acquire our 7th this year. So we will hire another regional operations manager that acts as a layer in between our corporate leadership team and also the marina staff. And they actually live on site and travel across their region frequently to those marinas.
Sure. Very cool. And then I think the last time we spoke, you guys were, I want to say 60 million under management. Does that sound right?
That is correct. We have, within the next couple of weeks, we're officially closing on 2 marinas in Kentucky that would bring us to that amount. Mhm.
Got it. Very cool. And do you guys have a short-term and long-term goal of where you want to hit over the next year to 3 in terms of new acquisitions?
Yeah, we would like to be at anywhere from 8 to 10 total marinas under management by the end of this year and 15 to 20 by the end of next year.
Okay, very cool. So definitely scaling. That's awesome. Okay, Angela. I'd love to learn a little bit more about the actual fund. I know we spoke about it just a little bit. Do you want to tell us a little bit about it?
Sure. Yeah, it's a closed-end fund. It is our third offering and our second fund. We are raising up to 15 million in equity, and we are expecting 2 to 3 marinas. Right now, we have 2 offers that are being worked on. One is a signed LOI, and we're drafting the purchase agreement for that property this week. We normally have a 60-day due diligence period to go through, and then around 60 days after that, we would expect to close. So we will add 40 to 50 wet slips per property in the first year, in addition to a rent increase and also implementing a lot of the operational efficiencies I mentioned. We have 3 different sharing classes that range between 8 and 10% preferred return and 65 to 75% equity split to investors. At our entry level tier, we are projecting around 30% annual IRR, and it's a 5-year term. So we pay out quarterly distributions that normally start within 6 to 9 months of acquiring each asset.
Very cool. Very cool. Awesome. Awesome. Okay, and now on to my favorite question of these podcasts. What part of passive investing do you think needs to die?
Yeah, I think the investor doesn't have any view into the operations of the business and they feel a lack of control, even though they might be willing to invest in the stock market where they really don't know the actual business plans or even the leadership teams that are running those types of businesses. But because everybody does it, they passively invest in the market and just accept, I'd say, pretty average returns with higher risk in some cases. And if they have that feeling of lack of control, that it could mean an unsuccessful investment and a low return on their investment. So, if due diligence is performed correctly, it's not only okay to passively invest, it's really a must to continue to grow your net worth. When investors have capital sitting idle or earning below average returns while they're busy on any active activities like their JOB or maybe actively running their own real estate investment, they could be missing out on a huge opportunity. There's only so many hours in the day and so many projects that somebody can take on. We've helped educate people. I've been doing this about 9 years, and
Wow.
I've watched the progression of people that may have actively invested and then they started building a nest egg, but they could only do that for so long and they needed to really take a portion of that and allocate it to passive investment. Definitely alternative investments. Again, if you can do the due diligence properly, because that's where you can see mid teens and beyond as far as IRR goes. So.
Sure, sure. And you mentioned due diligence a couple times, operations a couple times, and I'm bringing this up because it is definitely not my strong suit. It's why I built Invest Clearly. Do you have any advice? We could be specific to marinas on what parts of the operations people should really focus their due diligence on, and maybe not just marinas, because I'm seeing a lot of growth and interest on these operations plus assets syndication. And so, what do you recommend when looking at operations and thinking about due diligence? Should people be really zero in on?
Yeah. So within real estate, when rent is involved, definitely occupancy history, demand, rent increases that are built into the projections, year over year rent growth, understanding what the year over year expense projections are showing. And then debt service coverage ratio, I think, is a big one because a lot of these properties may have interest rates that are not locked for a certain period of time and they could be approaching that. And so, really understanding what is the ability of that sponsor or operator to meet the preferred return or meet distributions to investors and what's left over after that. So, they can ensure that they are actually going to get paid what they expect to get paid.
Great. Well, awesome, Angela. Well, hey, thank you very much for doing this with me. I've really enjoyed getting to know you and look forward to continuing our relationship. If people wanted to find more about New Haven Marinas and you, what's the best way to do it?
Yeah, sure. So you can go to newhavenmarinas.com. There is a contact form there, and we can send you more information and connect with you there. And just make sure that you put referral and invest clearly in the box. And then we'll be reaching out and we'll kind of share a little bit about our pitch deck, our growth plan, and then answer any questions that you have.
Awesome. Angela, thank you so much.
Thanks, Pat.
Yeah.
All right.
Thanks for listening to the Invest Clearly podcast. To find verified investor reviews or to claim your GP profile, please visit investclearly.com. If you enjoyed this episode, please remember to like, subscribe, and leave a review because that's how other people find the show. Till next time, invest clearly.